Eric Muathe with Muathe.com with the weekend world market analysis for the weekend of February 13th and February 14th, 2016. Let's take a look at world markets here. We see that most markets in Asia were down overnight, and we can see that Japan was down about 4%, and other markets were slightly down. Let's go about 1% in Hong Kong. KOSPI was down 1%. Australia was down 1%. And let's take a look at how Europeans market closed, which was a little bit different. European markets had a nice move on Friday, closing here 3% for the Footsie, 2.4%, and then 2.5% for the DAX and the French CAC 40, respectively. Take a look at the Americas with about 1 hour to go before the close of Friday. And we show here that Brazil is up about 1.3%, pretty much about 2 to 1% gain across the board on most markets here in the Americas. And let's take a look here at America, US market with about 1 hour to go, and the US market is also having a good session. Right now, the Dow is up 1.8, and NASDAQ 1.53, S&P 500 1.7. We see that gold is down. Crude oil is up about 11%, and the VIX is down about 9%. So that's how markets look like they might be closing for the week. So let's take a look at the charts. If we take a look at the Australian market, which is pretty much going to summarize most of the world market charts, is we got the big picture on the monthly, which continues to look bearish. So month to month, we haven't seen any improvement on this chart. So month to month, markets worldwide continue to be bearish without break to fresh monthly lows. We are looking at markets still showing that this is a move to 3-year lows on the monthly RSI. So the big picture continues down, irrespective of what day to day the markets are trying to show. And we can see that the MACDs in Australia continue to be trading to 3-year lows, as we know and as we've seen with clear demonstration over the last couple of months. As markets are moving to 3-year lows on the RSI and MACDs, we tend to get a washout, and that's exactly what's taking place. So big picture, to summarize, pretty much all markets continue to be pointing down, while if we take a look at the weekly, let's take a look at the Australian weekly, we see here that continues to be trading down. We can see here we are moving to fresh weekly lows below the previous weekly closing low for 2016. So despite the market moving higher in some markets on Friday, we are still looking at weekly charts still pointing down. And yes, I see an argument here that can be made that yes, we're making lower lows in price. This is a good argument for market short-term bounce, lower prices over the last couple of weeks, while the RSI generally is holding steady. So this could be positive divergence, good enough to start moving markets higher. In fact, you can see evidence of a short term. So within the construct of a down monthly chart, we are starting to see evidence that day to day, the market could bounce. We can see here lower lows in price on a daily chart. But if you take the lows of August and connect the RSI lows on a daily, we've come into nice contact with that line, and this could be setting up the stage for a day-to-day rally. So in other words, within the construct of a down moving market, we are setting up, I think, on the dailies to show possibility of a swing trade to the upside. Now I'll show you some charts that are really confusing, because even though we see that the markets are moving or showing support on the daily, the hourlies and the 30-minute charts are not playing, are not being consistent. In other words, we have confusion. Right now we got monthly charts pointing down. We got weekly charts for the most parts that are, on balance, not bad, could be worse. Daily charts are showing an improvement, right? And then we got now what I'll show you in this video, some hourly charts which are pointing a little bit to resistance and probably down, and 30-minute charts that could also be pointing to downside action. So lots of confusion, but I think net we can give the market the room for a bounce, since it's been a pretty much generally down 2016. So again, let me just draw the daily here for the Australian market. This is a nice line of support which could generate enough energy for a bounce. Unfortunately, if that line doesn't hold, and if the market breaks through that support line on the daily RSI, then that could suggest another setup for lower prices. As long as we get support on that line, then chances are that this market is setting up to stage some type of swing trade to the upside. So one thing I want to show here is for the Australian market, I think I should go ahead and show the level there. On the weekly chart, what the market needs to do is find support by moving back above the previous weekly closing low of 4948 or 48.50, which is this weekly closing low in January. If the market can reclaim back above that level, then that's a solid market that is trying to build for higher prices. But as long as we are staying below 4948, the previous weekly closing low for January, then the market still continues to be pointing down. If we take a look at Hong Kong, we can see here that on the monthly chart, we are still breaking to fresh monthly lows in price, which is very bearish. And the reason, of course, we know is because the RSI moved to fresh 3-year lows, as we had discussed. We also see that the RSI had moved below 38.2 on the monthly RSI, which tends to generate this type of bearish move. We discussed that. And we also see that the MACDs have been trading at 3-year lows. So here, the market had telegraphed the possibility for lower prices as the MACDs moved to fresh 3-year lows, as the MACD also moved below zero. Chances were that the market would make a fresh move to fresh lows, which is exactly what we are getting. So no surprise there. And also, if we take a look at the daily, we can see that there's a lot of resistance, because if the market is to move higher, it needs to clear this topside resistance. If I draw it like that, you see that it's come in contact over the last 2 weeks or so with that declining RSI line. So as long as the market is trading underneath the blue line, as long as the market has not cleared the resistance line, we should still see markets that generally pointing down, irrespective of day-to-day action. As long as we haven't cleared this resistance, we should still expect markets to continue moving lower. Now we can see the same thing if we take a look at the KOSPI. So let's take a look at the KOSPI. And the KOSPI monthly here, we can see that move to fresh monthly lows. We've been talking about this the last couple of months, that as this was the risk for 3-year lows on the monthly RSI, we should expect lower prices. We are getting that exactly as prescribed. And also we can see that the MACDs on the monthly were trading at 3-year lows. So the risk was always to the downside, and that's playing out exactly as we had thought would play out. And also we can see that short term, even on a day-to-day basis, we can see that there's a lot of evidence for continued downside pressure. Why? Because if we take the resistance line on the KOSPI, we can see that it has come back and made contact with the top side of this resistance line on the daily RSI. And so we can say that anything below this line is a market that is going to struggle. At some point in the future, we might have a chance of breaking out above that line. That breakout above that line is when one can consider the possibility of going back into the market for a bullish move, because that would be breakout. But for now, we haven't seen any breakout above that line, so we have to assume that generally anything keeping the RSI below this line is suggesting that the market is still generally net on the bearish side. If you take a look at the Japanese market, remember we had been talking about the possibility that the RSI on the monthly moving below 50 would generate a big drop. Now keep in mind, the market is trading somewhere here after another 4% drop on Friday, which is not reflected on this chart. So we had speculated in the last couple of weeks that as the RSI moves below 50, we are going to get a huge drop. And we are getting this almost 14% drop this month, which is consistent with our analysis over the last couple of weeks. So no surprise there. And also we see that the RSI had already telegraphed the possibility for lower prices as the RSI moved to 3-year lows, which is our sell signal. And the MACDs clearly were telegraphing a market that had the risk of lower prices, and that risk has been achieved. So no surprise there at all. And even before Friday's 4% drop, you can see that the RSI on the weekly was trading below 30.9, which is just another bearish territory. So here we are seeing a market staying below 30.9, and that is why it is having this huge drop for the week. And as long as the RSI on the weekly is below 30.9, there's little chance for a market recovery. And if you take a look at the daily did close with Friday's move, which should take the market here at 1400 and change. RSI also moved below 30.9 on the daily RSI, which is consistent with stocks when they move below 30.9 on their daily time frame. So lots of bearish situations here. And we can also see that if you go back to why the market came off the highs here in, let's call it early February, that was because the market was coming back to test the break point of December. So once we broke through here in December, so that break in December right there brought the market off the levels here at about, let's call it in the 1900s. And so we drew a line from there, which should look like that. And we've seen the market struggle to hold the RSI 50 on the daily, rejection at the red line and RSI 50 for the highs there, rejection at the red line, which happens to be around RSI 50 on the daily for the highs there. So the sell signal was already there over the last couple of weeks, and now we are seeing the other side of a sell signal, which is markets probing lower prices. And again, we haven't seen any evidence of a bounce based on this chart. So the risk, in my opinion, continues to be for market to be looking to lower prices over time. Let's take a look at the Nifty. And here we can see that since now that we can look back and see, okay, so we got this break here below the previous monthly closing low. So that break somewhere there was consistent with the RSI recently moving to 3-year lows. And we've talked about the risk, that the risk would be for lower prices, and the market is doing exactly that. So, and we can see that the MACDs were also consistent with our major sell signal. And here we move to 3-year lows. 3-year lows on the MACD there moved below 0. And so the risk is still to the downside, in my opinion, on the monthly chart. So the long-term monthly chart still suggests that month to month, there's a lot of risk to the downside. Take a look at the long-term monthly chart going back to 1990. We can see that once we broke this trend line connects the lows of late 08, early 09, late 2011 and early 2012, and then middle to late of 2013, and also this slight support attempt there. Once we broke through that, we can see the break right there late last year has brought the market down. And so the risk continues to be to the downside based on the monthly chart there. We take a look at the weekly, and the weekly we can see here coming very close to closing below 30.9 on the weekly. So if we move below 30.9 in the coming week, expect another big down week. Here we are also seeing that the market broke down again after 2 weeks of rest. In other words, it recorded a low at about 7,400, and this was right here. So we had 2 weeks of rest since recording that low. We've come back and broken through that. Now, if you recall, we had been speculating that the market would have to make fresh lows. Why? Because the 10-week moving average was already trading at fresh 52-week lows. Whenever you see the 10-week moving average move to fresh lows and the price hasn't moved to fresh lows, chances are prices are also going to have to move to fresh lows. And so we see here that, yes, this is a big drop, and at some point the market is going to have to rally, just based on the fact that there's always a relief rally here and there. But the big picture, in my opinion, right now still continues to be to the downside. In fact, if you take a look at, let's go take a look at a 5-year monthly chart, or actually a 5-year weekly chart, we can see that we were expecting the possibility of some support somewhere here. And this is probably one of the best charts that shows what's going on across the globe. So this was support late 2011, support middle of 2012, nice support on the green line 2013, support here late 2000 to mid 2013, again support here, and all this led to multi-week, multi-month rallies. Support here for the lows there, double bottom support here for a little bit of a support zone there. Now, unfortunately, since 2011, we've failed to hold above the green line. In other words, the green line is no longer support, which suggests that we are entering a new phase. And this phase is for a market that is more than likely gonna be trending lower. So the failure to hold back above the green line on the weekly RSI suggests that we are entering a market with a bearish look, bearish behavior, and a bearish response. We can also see that there's a trend line break. If you take the line and extend it, this line has finally broken. And so the risk again here, based on this weekly chart, is that the market is trying to telegraph that it is really weak and could actually see lower prices. At the very least, we can see that there's resistance. If you take the top side of the weekly RSI, this market continues to be pressed down as long as it is trading below this declining RSI line on the weekly. So net result is that week to week, month to month, we are still looking at markets that could be going lower. Now keep in mind that the daily could have daily bounce. We could bounce within the construct of a big picture down monthly chart. So day to day, we see an improvement, slight improvement, and it's very slight. We are seeing that prices are making substantial new lows, while the RSI is making a slight improvement. And sometimes this slight improvement can lead to some type of a short-term relief rally. So within the construct of a down monthly chart and down weekly chart, there's a chance for a day-to-day rally. So that's the daily. Take a look at the hourly. Unfortunately, based on where the market closed on the hourly, trading below 30.9 on the hourly tends to be where the markets really take a big drop and a big hit. So here we are seeing that the hourly continues to be bearish, and that's where I was saying that lots of confusion on the charts. If you take a look at a 5-minute chart, you can see that the 5-minute chart was showing resistance coming into late Friday. And you can see even the highs here for about 2 days ago came at the resistance on that line. The highs here, double top resistance for the highs of February 9th. So this has been where the market has been stalling. So hour to hour, it would not surprise me that the market is still stalling, even though I go back to the daily, and the daily, like other world markets, is showing the possibility of support. And yes, it is confusing. So monthly charts are bearish, weekly charts are bearish, daily charts are showing some improvement. So net, lots of confusion. And I think week to week, we have to assume that the markets are still gonna be looking to go down. Take a look at South African market, same type analysis. We are still trading at 3-year lows. So the risk is still lower on this monthly chart. We haven't seen any positive gain. So prices are still pointing down. MACDs continue to be trading and pointing down as far as the South African market is concerned. So lots of consistent market charts across the globe, all of them pointing down on monthly charts for now. And of course that could change, but for now they are pointing down. Take a look at the weekly chart, and you can see that this market continues to struggle to hold back above the 50 level. If you draw a line around the 50 on the weekly RSI, we can see that over the last couple of months here, there was double top resistance for the highs there. It failed to hold above the 50 and finally moved back below 50 here for that level there. And the price has been down since. Rejection at the 50 level for the highs there. And now we are showing another rejection for the highs, current highs for the last 2 weeks. So net, this weekly chart suggests that this market eventually looks to be pointing down, which is consistent with other markets. On the daily, for the South African market, we can see that top side, there's a lot of resistance. So if the market is to move higher, it needs to clear this top side resistance, which is something we've seen across many markets around the globe. If we take a look at the Footsie, we can see here just the same type analysis with other world markets. Monthly charts continue to be bearish. There's no argument there. We are trading at 3-year lows. We are also moving the monthly RSI below 38.2, which tends to be an area where markets get a major move lower. Sometimes we get what can be termed as a crash when markets are moving below 38.2 on the monthly. You can test that if you want to. We can see here that the MACDs are also moving to fresh 3-year lows as far as the Footsie is concerned. which is consistent with many markets across the globe. We are also moving below MACD levels of 0. So lots of bearish market charts on the monthly charts. Take a look at the weekly. Again, to be consistent with other markets on the weekly, we are moving below the area around 5,800, which was the previous January weekly closing lows. We broke through that. If the market wants to build higher, it needs to reclaim that level above the previous weekly closing high. The level there that the market can reclaim and move higher is 5,804.10. So all this should be in the description of the video. And if the market wants to move higher, it needs to first and foremost be above 5,804. That would suggest that if the market was to reclaim that level, so because we are making lower lows in price here, if the market can build on this positive divergence, so improvement on the RSI could suggest that week to week, maybe the market could choose to go higher. Why? Because if it holds on this line, then possibility of a weekly move higher or a multi-week move higher is still possible. If you take a look at the daily, we can see signs of support on the daily. We can see lower lows in price over the last couple of months, while we see an improvement on the RSI technicals. So this is probably one of the reasons why the market was up 3% on Friday, because of this slight improvement in the prices. Now, if you take a look at the hourly, let's take a look at the hourly to see what the internals look like. We can see that generally speaking, the market's been coming back to this level and stalling. Most recent stall took place exactly as we had described around this level, so for the highs there. And so we can see that yes, net the hourly chart is okay. Maybe if the market was to come here and show resistance around the red line, we could look for another swing trade lower. But for now, the market is not looking that bad on the hourly. The 10-minute chart also is showing a slight breakout, which is good. In other words, there's some type of life coming back into the market, and I don't necessarily think that the market has to go down. In my opinion, this looks okay. It's not the worst looking chart, and especially that daily chart showing that positive divergence, making lower lows on the daily, while RSI technicals improve, sometimes can be the setup that starts market recovery. So let's be aware that we can't be necessarily bearish all the time, that the market could easily move. In fact, if you take a look at this daily RSI support line, it goes back to August. You can draw a line like that, and it connects nicely with the lows going back many months. And this is the kind of support on the daily we should not ignore, because it can set up a nice multi-day, multi-week rally to the upside. If you take a look at the French market, you can see that on the daily, there is an improvement here. And remember, this chart is not showing Friday's move, which was higher, about 2% on Friday. So we are showing that the market is bouncing off this support line on the RSI. Again, nice positive divergence. We are seeing slight improvement on the RSI. So let's draw that again. So just bear with me here. We are seeing an improvement on the daily RSI, while prices have been making lower lows. And that could set up a market for a swing trade to the upside, unless the market comes back and breaks that support line. So as long as that support line is holding, we have to give the market the benefit of the doubt for a day-to-day, week-to-week swing trade to the upside. If you take a look at the Canadian market with about half an hour to go before the close, again, this has been a market that has been down ever since it broke to fresh monthly closing lows, and ever since it broke to fresh 3-year lows, we've been expecting lower prices. So no surprise that the market's had this major drop. And again, we are still trading at 3-year lows on the monthly RSI. So the fact that the market's been drifting lower, no surprise at all. And we can also see here that the MACDs have been trading at 3-year lows. So no surprise that the markets are still looking bearish on the monthly charts. Also on the weekly, we see that the market had come back to test the previous RSI resistance line. So the market had come back to test this line here. And of course, it is stalling until down the road when the market can move above that RSI resistance line. Then this is a market that should see lower prices. We also see rejection at a declining 10-week moving average. So no surprise that the market continues to be pointing down week to week, month to month. And also we have to watch this recent weekly closing low for January. Anything below that recent weekly closing low and the market could see lower prices. The level to watch and to set an alert would be at 12,073.46. Anything moving below that threshold would suggest that the market is still bearish and could accelerate to the downside. So watch 12,073. Anything below that is another fresh sell signal. Now, if you take a look at the daily, we see that the daily I think the daily looks okay in my opinion. And when I say okay, I mean the fact that it is still showing resistance at a declining 50-day moving average means that net, this market continues to struggle. I get that. But I think there could be a possibility that it comes back to test this declining. In other words, a move back to test this declining 50-day moving average makes sense. So I think what's going on is this, is we might be coming back, moving higher to challenge this line. In other words, I will give the market breathing room to rally back to test this RSI resistance line. Okay, and depending on whether we can break out above the blue line or maybe we stall, and if we stall on the blue line at some point, then the next swing trade is lower. So of course we will have to wait to see, but I think the market to me looks okay. Take a look at the hourly and we can see that the hourly is between, I would call it what, sideways action. We see topside resistance, which gave us recent highs, high there for the resistance there, uniform activity above the red line and back below it for the highs there, and also here rejection for the highs there, rejection on the red line for the highs there. So we might be sideways. And remember, we are sideways within a bearish construct of a monthly chart. So net, I think the risk continues to be down, even though day to day the market has a chance of moving higher. Let's take a look here at the Brazilian market. And if we take a look at the weekly chart, we can see that even if the market was to move higher here, there's a lot of resistance levels. Number one, we haven't taken out the declining 10-week moving average. This 10-week moving average has been a problem for a while. Okay, so lots of work needs to be done here to repair this chart. There's a lot of resistance on the weekly RSI. It needs to clear that level if it's going to move higher and hold higher levels. Also, there's another one connecting recent highs. So lots of resistance, just like we can see on the Canadian market here. We can also see that if you take a look at the monthly, even though the market is up on Friday, up about 1%, we can see that it is still trading at 3-year lows on its monthly RSI, which is a major sell signal. So the monthly chart continues to be bearish, irrespective of day-to-day movement. We can see here that the monthly chart continues to be bearish because the monthly RSI is at 3-year lows. So irrespective of day-to-day action, hour-to-hour action, the market is still looking down. We take a look at the daily RSI. We can see that, as we saw in other markets like Australia and the KOSPI and the South Korean market, KOSPI and the Hong Kong market, we can see resistance on the top side of the daily RSI. So yes, you can rally day to day, but until we clear resistance on the daily, until we can clear that resistance on the daily, these markets generally continue to be pointing down, in my opinion. I would like to take a look at the S&P 500, and also like other markets, we see a slight improvement. We made lower lows, and I'm sure you've seen this. While we're doing that, we made a slight higher high. This setup could be good enough for a day-to-day swing trade to the upside. So let's be open to that. Also, you can draw this another way, connecting the lows on the daily RSI from August and extend it. You can see right now, as we started discussing this yesterday, when the market was trading at the lows somewhere here, we were starting to suspect the market could bounce because there was a chance this could hold. So as long as this line is holding, even though the market still looks bearish on the monthly charts, as long as this line is holding day to day, there's a possibility for a nice continued swing trade. And that's the risk, is You don't want to be absolutely convinced the market has to go down. This daily chart is showing an improvement, and we have to wait and see. Now, on the other hand, it has to be said that at some point, if we break this support line, if we break it, then that would be another fresh sell signal. Otherwise, right now, I think the market is doing its best to steady itself, maybe even have a chance of a multi-week rally high. Keep in mind that you can watch in-depth US market analysis for the US. I'll have another video discussing, US market, NASDAQ, S&P 500, Dow, and probably the Dow Transports and the VIX. So if you want another look at the US markets, check out my video, which should come along sometime on Saturday. Otherwise, ericmuadid.com. Enjoy your weekend. Be good. Peace and blessings. I am out. I am out. What does that mean? I guess it means I am taking a small break. I shall probably see you next weekend, maybe. Anyway, I'm just playing. Enjoy yourselves, guys. Blessings, blessings, blessings. I am out.